tryna take it down, place for you just scoring minds, best the bar.
All right, ladies and gentlemen, I hope you're having a wonderful start of your weekend. Today was an interesting day in the stock market, but I want to talk about what I think could cause a downturn in the stock market here, especially as it relates to some of these events that we've been seeing today. So I'm going to cover the neurovirus stuff really quick for you guys, give you an update, even what happened here today, go over some of the trades we made, and well, I think I'll just even link that even to the overall theory. But right off the bat, there's a few just quick things to pay attention to. The market did go down. It did go down as this news and information started getting released, but also pay attention to the amount the stock market dropped. It was only 170 points. It was up about 1/3%. We had all those good earnings, the intel and all that, but it did reverse. But in the grand scope of things, especially how much we've gone up, this wasn't that bad of a move down. It wasn't that big, but we could talk here about some of the future implications even last time and even what history has said through any of the last viruses and even discuss how this neurovirus could affect it. But what happened even today, this even happened right after close. So all throughout the day, we weren't acting on this information. The markets did go down a little bit after hours, but we found out that they updated the count. They added 14 more deaths to the total. So now it's 41 total dead from the NcoV or the Wuhan Coronavirus. And now over 1,000 people infected. Now, during the day, there's about 2 or 3 things. Again, as the numbers came out in the morning, the market started to react negatively. But why markets started to go down? There was a report that China was restricting travel for about 46 million people in 16 different cities. So it's definitely a much more bigger reaction there in Asia. But again, this is going to spread fear throughout Asian markets and then even as the U.S. investors, because again, this is going to be a very, very slow process here. But that was kind of the first thing that dropped us and then brought us down to lows. And then even actually after hours today, there was an update of a third case in France. And then there's now even cases in the United Kingdom. But what really sent us over the edge today, it was when the third case in the United States was confirmed. It was some senator. He came out and then he said there's also 63 suspected cases in the United States. So we don't know yet. There is an incubation period. It's going to take 14 days. That's what people are saying. So again, we're even seeing now as the numbers get updated. But now I want to talk about how can this cause a stock market downturn? I'm going to speak in both the broader sense and then also relate it to here. But even as far as this goes, the stock market did react negatively in the case of SARS. And even there's in data on the Dow Jones, even in the 1918 Spanish flu. And a key number is 30%. So in 1920, again, that was 100 years ago, medical technology, a lot of things were different. The Dow Jones dropped 30%. Now in 2002, when it was markets did go down 30%, but it wasn't just because of SARS. So the stock market did drop in 2002, but it had so much stuff already going on there. And that's what I'm going to go over here and even talk about some of the differences between 2002 and right now. And again, what I'm even expecting here, but this is why I even got the title. I said this on stream, but this is the problem that the Fed can't fix. But during 2002, when this occurred, the Fed was actually fixing it at this moment. You know, this was after pretty much 3 years of 30% or more drops on the NASDAQ. And you see the Dow went down 6.15, then 2002 dropped 16%. But they were already in a rate cutting cycle now and trying to restore things and get things actually back up and running. But the key now, 30%. Despite whatever the markets did during SARS, it affected airlines by about 30%. They dropped about 30%. And there was, you could look this up, there's studies on this, and people have definitely talked about this, but it's essentially the hit to airline travel and the timetable that it takes. Pretty much they say it has like a slow impact of about 3 months to finally bottom out, and then it'll stay kind of low and volatile for 2 months. And then pretty much by the next third month, it's like a 6-month process. The stocks will be right back up. That's what's happened pretty much in the past. So that being said, I think the airlines are going to be at play with this, and even this situation, pretty much they say that the market peaks or the market bottoms at the peak of announced cases. So that is now, if you really want to be able to look at this whole situation in a context that's kind of quantifiable as it relates to the effect on the market, you could literally just see as the cases get announced. So pretty much as the cases increase and the deaths increase, that's when you should start to expect the stock market will decrease. But it'll happen slow and in a volatile fashion considering what's going on. But then pretty much once the cases really peak and we start getting numbers going down or not increasing, especially at a rapid rate, you'll start seeing the market kind of still be volatile and then do its own thing and go from there. So that gives you some context into what's happening today. So now this is where I'm saying what could cause a downturn here. And again, if you guys have been watching my videos, I've even been saying some sort of mini correction. Again, the fact that we've had such a big run up, anytime we have kind of seen this historically, we can expect kind of some random downturn. But now this is what I'm saying. The Fed can't fix this because you have the Fed supporting it, the repos. There's good earnings. There's really, again, we had those panics at the beginning of 2019, the end of 2018, but the yield curve's back to normal. And again, bonds and TLT are showing something now, but really it would take something really, really bad to mess everything up again, or something not in the sense of a black swan, but outside of the realm of control, especially as far as this stuff goes. And now what makes me bring that up is what happened in 2002 when we saw the dot-com bubble and how that process played out. So I said this the other day. I wasn't expecting it at first. I said it last week or about 2 weeks ago, like a natural disaster. That's something that cannot be controlled. This virus outbreak, that's something that cannot be controlled, where again, it starts to affect economy. And you guys will see again as I relate that here to 2002. But if it messes with economic activity, again, quite frankly, you know, if 42 million people in China cannot go outside right now, or they're being quarantined, they can't travel, people are fearful, and then this virus is actually spreading and killing people. And now even the mortality rate from what we were trading on today, the percentages was about a 2.5% mortality rate. Now it's jumped up to 4.6 with, you know, double the deaths now. At the end of the day, looking at it from a economic point of view, those people are sick, or if they have to go home, they have to take care of people. If people are sick, they're not going to go to work. Now, what's going to happen to industries, state-sponsored industries, again, all sorts of stuff, like theaters are already closed. So it has an economic impact. It's just for however, the longer it continues, the bigger the impact, essentially. So again, we're not at that point yet, but this is what I'm saying is if something does get outside of the realm where now you can't just, even if the Fed does throw money at repos, people and economic activity and fundamentals of companies' earnings, at least earnings guidance, is going to change quite drastically. You might even, again, the longer it continues, investors are going to pull their money out, or it could hurt investor confidence. So that is what could bring about some sort of 2020 downturn, or even a little correction until it bottoms out for a little bit and continues up until the yield curve flattens, and then we actually see a real fundamental issue with this system. But this is just now, that's what I'm saying, it's like a downturn or correction. This is an external force that could temporarily impact fundamental, but again, it doesn't necessarily mean it would actually break or crack the system, or that there is a systematic failure like we saw with the mortgage crisis. And then now, how do we compare that to 2002? So now, pulling this full circle, this is what I'm saying, and now this is even what I'm basing it on, so you can kind of have some context here. So here you go. You guys can kind of see how even 2000 look. This is the actual chart. I pulled this back to 93, baby, when Josh Answers came into the world. It's crazy, man. The stock market looks good, baby. Yeah, shout out to 90s, babies. But this is where it started. But here's the Wikipedia. It says 2001 stock prices took a big sharp downturn in stock markets across the U.S., Canada, Asia, and Europe after recovering from lows reached following the September 11 attacks. So again, this is one of those things, and one of those events is what happened with September 11th. That is something that actually affected the economy. Indices slid steadily starting in March 2002. SARS was November 2002. So again, markets were dropping before that. Keep that in mind. With dramatic declines in July and September leading to the lows reached in 1997 and 1998. The U.S. dollar declined steadily against the euro, reaching a 1-to-1 valuation not seen since the euro's introduction. This is where it gets to the good stuff. And despite this being Wikipedia, I mean, it is fairly on point, and it does explain a lot of the fundamental problems that went down. So I agree with this a lot. Some people might even have different views, but this downturn can be viewed as part of a larger bear market or correction that began in 2000 after a decade-long bull run. So compare that here to today. It had led to unusually high stock valuations, according to a report by the Cleveland Federal Reserve. That's a little different than where we're at now. The collapse of Enron is a prime example. Many internet companies, Webvan, Exodus Communications, Pence went bankrupt. Others, Amazon, eBay, and Yahoo, went down dramatically in value, but remain in business to this day and have generally been good long-term growth prospects. Shout out the long-term portfolio. An outbreak of accounting scandals. So again, now that's where Enron, they mentioned that. Arthur Andersen's Adelphia. I don't know if any of you guys remember that. I remember that. WorldCom. Again, these are actually very iconic names. they had big accounting scandals, but saying it was also a factor in the speed of the fall as numerous large corporations were forced to restate earnings. And again, this is a key concept. And again, the longer, let's say, this neurovirus continues, the more likely it's going to have an effect, a material change where companies will restate their earnings or their guidance. And investor confidence suffered. The September 11th attacks also contributed heavily to the stock market downturns as investors became unsure about the prospect of terrorism affecting the United States economy. So again, people were worried about investor confidence. They were worried about restating earnings, even if it was from a scandal or anything of that nature. Then people were also worried about bankruptcies and pretty much now the high valuations. But this does put something in context. What did cause somewhat of a downturn here, there was other factors, again, stuff that now came down to the economy. That's where September 11th, that could not have been controlled. Even now, what was going on, pretty much what I'm saying here is 2000 and the dot-com bubble, it wasn't really because everything was super valued. That's why it just had to come down. But now you're seeing effects like, you get bankruptcies. That's fundamental and financial, but something you can't control is those accounting scandals. So we're not seeing that here today. We don't have these crazy events that could contribute to the decline of investor confidence and forcing this stuff, but what could affect us would be something that could affect the economy. So again, it could be the neurovirus. My thing, I said, in the broader sense, it could even be now a natural disaster, earthquake, tsunami, parts of Asia, whatever it may be. I mean, who even knows? But that is something, if I am looking, and essentially if you were going to ask me, do I think the market would come down in 2020? Unless the liquidity issues with the repos, the banks, and all the problems we saw with the yield curve, unless they lose control of that, I don't think the market is going to go down. It would have to be some sort of event like the virus, or even down to a natural disaster, or even now I would throw in a scandal. That I would need something of that nature to be able to say the markets are going to come down here in 2020. So, but essentially, you could even see here now coming down to the chart, this is when they were already dropping low, and then they came up in January 3rd, and I think they dropped a little bit again. But essentially now, even relating this to SARS and even today, pretty much, though, the markets did get affected. Like we said, travel got smashed during that time. But the difference is now the market was pretty much already enduring so much negativity, and then the Fed was already in damage control mode by this point. Again, imagine the stock market, NASDAQ going down 39%, and then 21% again, and then 31% after that. Literally 4,000 to 1,300 in 3 years, So there was a lot of stuff going on. It was both the high valuations, but there's a lot of things there that contributed to that. So we're going to see a different effect, and that's why even moving forward, I'm going to look at travel companies and all that. But I would say don't panic. I mean, just watch what happens here with the news. It's going to be surprising and interesting, and yeah, that's it. Oh, I was going to go over the plays. I mean, finally, maybe I'll save this for the video tomorrow. I'll share this with you. We made different plays, so we had these UVX. We had a lot. I'll have to say that. Check out the live stream, baby. You don't know we're live Monday through Friday, 30 minutes before. I'm putting that. You get it. All right, I love y'all, baby. Enjoy your weekend. I hope you have a wonderful weekend, man. I don't know. I love you. I don't know how to end this video. It's a little different than the watch list, so stay blessed, man. The cult loves you. I love you. Be easy. Enjoy the weekend. Learn about this stuff. Again, try to understand economies and use this as an opportunity to look into history and anything like that. Don't panic. The best part is it's going to come in waves. All you need is patience. Take your time. You got the cult, the stream, everything. That's it, man. All right. I love y'all. Peace out. Let's go.